So let's talk more about this rebound that we're seeing in the market today. And for that, we want to bring in Mark Hackett. He's the Chief of Investment Research at Nationwide. And Mark, great to speak with you. I guess first, let's just start with what we've seen over the last several trading days. We saw weakness in the market today. Yes, we're seeing some buying action. But what do you make of the recent moves?
Yeah, the last month and a half or month or so has been pretty much this tug of war between the strong fundamental picture and really the inflation worries that we've seen. We've been back and forth, really in a fairly tight trading range. The market now focused on fundamentals to the positive clearly is a difference from what we saw last year, where it was much more on the hope of things improving. So now that things have begun to improve, we're really back in this tug of war between those two factors. But really, we're growing into our valuation a fair amount at this point. That is a positive thing. We've seen estimates for the year rise about 13% or so, which really takes some of that excess valuation off the table. So really,
so Mark, I want to. Can you elaborate on that growing into your valuation? Because you talk about the sawtooth action, but the trend is still up. But what some investors need to have their perhaps forward-looking sight on is when that trend is no longer up and maybe be setting some exit points in 2022?
Well, clearly at this point, the direction of earnings has not stopped going up. So that's going to be that impetus where you would expect that markets would stall. But at this point, we really don't see anything in the near term to stall that. We're looking for about 35% growth this year for the S&P 500 earnings-wise. Still, at this point, estimates look for 20+% growth next year. So yes, clearly an earnings stall would be a very difficult thing for the markets to overcome. But really, we don't think that's so much the concern. It's much more about the valuation you're paying for those earnings, and also some of the outliers such as inflation as well.
Mark, when we take a look at tech, we have the NASDAQ, up almost 2% here in the final hour of trading. And this is a sector that has been beaten down, to say the least, over the last several weeks. It's on track for its worst month, actually, since we've seen since last March, going back to March 2020. Do you think we're still seeing some of these big tech names bottoming out, or are there now potential buying opportunities there?
Well, the story about growing into valuation is really even more obvious in the tech space. We got very far, very fast last year. It's going to take some time for these names to be able to grow into a valuation that's a little bit more reasonable, particularly given the sentiment shift that we've seen, where investors are much more aggressive in these kind of more pro-cyclical and less momentum-based areas.
I'm not asking you to comment on a stock like Apple, but as I look at them, and we talked about this with other guests, their PE ratio, when you're looking at the valuations here, it's at 28. So when you talk about growing into valuation, if you're looking at a tech stock, it seems like some of the big names, which a lot of people were getting out of just a month ago, might still have value in the regards in the ways you're discussing with us.
Well, the large tech names, Apple being an example of this, but you would put Microsoft in this camp as well. They have so many different levers they can pull in order to add value that those aren't necessarily the names that you'd be more worried about. It's the more high-flying, momentum-based names that clearly have much more valuation challenges. But you think about Apple, you can grow revenues, you can buy back stock, you can buy other companies. So there's a lot of levers to pull in order to drive value for shareholders.
Mark, I got to ask you about the crypto market, because it certainly has been driving some of the action. At least it was interesting to see its impact on the broader market, at least looking at the action yesterday. How are you looking at that from an investment perspective, or really the impact that it seems to be having, at least on the overall market?
I think the crypto market is a really good kind of a example of investor sentiment and investor behavior. We don't pay too much attention to the movements of the currencies themselves, more so about what that suggests about risk appetites of investors. And I think what you've seen in the NASDAQ and also what you've seen in crypto markets over the last several weeks is really much more skepticism, much more nervousness by the average investor. We think that's probably a good thing. We've probably gotten a little bit too optimistic, both in investor expectations in the middle of April. I think we're getting to a much more reasonable level now. Again, crypto being kind of an example of that.
All right, Mark, great to speak with you. Mark Hackett, Chief of Investment Research at Nationwide. Thanks so much for taking the time to join us today.